the market losing a bit of ground today, but in many ways it's not moving much beyond this 3,900 level. It's not going to 4,000, a resistance level. It's not going beyond 3,900. What do you read into activities?
Well, it's almost like a stagnation point whereby there are a few foreign investors in the market interested in the blue chip sectors, especially KCB for that matter, and a few other blue chip counters, because if you look at the performance, those have been the counters that have been performing. Then on the other hand, you find that the high cost of living has made a lot of retail investors pull out from the stock exchange. So when you look at those two forces and you put them together, you notice that's where you have the sort of the market rises to a certain point and again loses. When you look at the turnover, and especially going from last week's turnover of about 600 million to lower turnover of this week of about 250, that could be one of the key examples.
Now, Waiyaki, what we do know is that fund managers have preferred to go into the bond markets and buy up some treasury bills, obviously because interest rates are higher, because there's a lot of general uncertainty in the market, but they feel that this is where they're going to be making some profits, at least in the medium and immediate term.
Yes.
Is this situation likely to continue in this way?
Well, you have to look at it from the point of view of the fund manager, because as a collective pool of funds, they are more answerable to the unit holders, and for that they have to ensure that their mode of investing is as viable as possible. And also having in mind that I, as a unit holder, let's say I'm in one of the fund managers, can very easily opt for another fund manager, and that means that each has to be competitive in nature, and competitive at the end of the day comes to the returns they offer. And they've looked at it at the moment with sort of, there's a bear market at the NSE. They've looked at how the interest rates have risen up. You notice the CBK increased the repo, so interest rates are up. You find that that is a key area that fund managers will automatically switch to balance out their portfolio.
I mean, I'm asking this, Waiyaki, because we're now beginning the third quarter of the year effectively.
Yes.
And, you know, the market has really underperformed over the last 2 quarters.
Yes.
People are looking for new listings, fresh IPOs, something to just lift up the profile of the NSE. How do you think investors are going to be allocating their positions going forward?
Well, I'd say there's still that avid investor who has ridden the cycle, has looked at the market cycle, because with every given cycle, there'll always be a high and there'll be a low. You'll have your bulls, you'll have your bears. Currently, the bear market is what has been dominant. But when we look at it, I notice that one of the pending IPOs that is coming on board, British American, they finally got CMA approval, and they should be on board around the 12th of July. And up to around the 5th or something of August. And this would be one of the key things that we're looking at to spur. But you also have to look at the end of the day, whom you're targeting, because the same retail investors are the ones who are actually struggling, not really struggling, that's per se, but actually making ends meet is becoming a tougher and tougher affair each day, because cost of living has gone up. So like just this week, you notice the Electric Energy Regulation Control Commission halted Kenya Power's intention to increase the prices of electricity because of actually what is happening in the market. They're looking at generally cost of living is high. So it's almost a very interesting balancing act, because on one hand you want to spur growth, and on the other you have to be cognizant with the reality on the ground that actually the cost of living is expensive.
So what's an inflation hedge then in Kenya? Because we know that inflation is now above 14.4%. You know, it's moved into the double digits so rapidly in the last 4 or 5 months, and that's quite a worrying picture. So however it is that investors put their money into either equities or bonds, they're looking for a hedge against inflation until growth is really quite buoyant.
Yeah, I would say you'd look at it maybe about 10, 12%, but looking at in terms of volumes, what would you be looking at between the rate of inflation and the rate of return? What is most viable? Would I make more money through the stocks, or would I be best placed with government-backed securities? And at the end of the day, the government-backed securities tend to be coming out much stronger than directly investing in the stock market.
Let's talk about the gainers in today's session. Uchumi up 5.2%. Unga continuing its upward trajectory on price at 4%. Pan-African doing well, 3.6%. Kenel Cobalt also up 3%. I'm curious about Uchumi, you know. Just before they relisted in June, people were just so cautiously optimistic. They were quite ginger
Yes.
in their approach, saying here's a company that literally went insolvent, had to be kicked off the stock exchange, they're coming back. How do we know their balance sheet is absolutely clean, even if the CMA has given them approval? And now all of a sudden it's one of the more active stocks. Why is that?
Well, like I said a couple of weeks back, I recalled that between the two types of Uchumi investors, those who had a bitter taste in the mouth and they are waiting to offload their shares, and those who have been part of the Uchumi history, whether by shopping at Uchumi from tender years all through, those are the two types of investors. And then you have the strategic investors or the foreign investors who all are looking at it from the point of view of that. Will it offer a competitive advantage against the likes of the big retail supermarkets? You have the Nakumats, you have the Tuskys. Uchumi has still, despite having all these setbacks and a lot of government backing, and for the PTA Bank and KCB to agree to convert the debt into equity, that goes to show you that there's a lot of belief in the Uchumi brand, and the brand is still strong in the market. So I would say that now we have sort of shed off some of those investors who felt that they do not want anything to do with Uchumi, and they sold off. Hence, you notice when it was listed, actually the stock price went very low than what most people had anticipated. But slowly by slowly, it's gaining ground, because what is happening is now you find the genuine investors who know or who feel that they would invest in Uchumi, and Uchumi is a viable investment.